Hey there, everyone. Welcome to Solutions, Not Just Problems. We are your hosts, Vanessa K and Be Real. Be Real, how you doing today?
Hey, things are great. Cooling down a little bit here in Providence. Uh, Probably in the 70s today. Yesterday was blazing hot. We got a chance to play a summer league game yesterday. We won 73 to 41.
Oh, wow. So you're
Yeah,
winning
yeah,
this year. Last year, I
yeah,
remember you were losing.
yeah. We getting back. The kids, we got quite a few young kids, sophomores and juniors, but they're picking it up. The intensity's there. They really put in the effort. So
Good
I'm,
deal.
I'm
They
saying
might
we,
be
we,
better
we're trying to
next year.
get them ready for the upcoming season.
Oh, yeah.
The
So do they go
varsity.
to the playoffs and all of that after?
Well, the playoffs will probably start in about 4 weeks. Right now, I think we're in third place out of six teams.
Oh,
So
wow.
we're doing okay. Doing okay.
Good deal. Good deal.
Yeah.
Well, viewers, last week we talked about credit. And all the intricacies that go into credit and how to prepare yourself and position yourself and maintain your credit. This week we're getting into taxation. And we're going to talk about the basics, starting off, what you need to know when you're planning and preparing for your taxes. Just like Christmas, the 4th of July, and Thanksgiving, tax season rolls around every single year, right on schedule, and it's impossible to ignore. But for many of us, it's the most dreaded time of the year, right? Often that anxiety stems from a lack of understanding or simply not knowing how to prepare. Taxes can be intricate, and without the right knowledge, may feel like, trying to decipher a foreign language. That's why today we're going to focus on how to prepare effectively and stay ahead of the curve when it comes to the tax season.
Yeah, what we're trying to do, we know it's, after the tax season, but to me, it's never too early to get started, to get that knowledge you need and start preparing now. And next week, we're going to kind of follow up with kind of like how to invest and how to more or less manage your money and kind of combine the two. So you guys will get part two next week, which talks more of the tax planning and investment side. Okay, but this week we're going to talk a little bit about how to prepare your taxes and some of the things you need to do ahead of time throughout the year. Okay, this is not just a process or something that we do on April 15th every year. We need to start preparing throughout the year, and you're going to see some things that perhaps you've been doing or you haven't been doing, but hopefully this information will definitely be useful to you moving forward.
Absolutely. And the deadlines is one. Being a business owner, I don't know why, but I always miss the business deadline.
Mm.
The business deadline, for everybody who doesn't know, is March 15th. The personal tax filing deadline is April 15th.
Hmm.
So, keep that in mind. My accountant's always coming to me around March 1st. You got your taxes done? I'm like, oh crap, it's March 15th already. So keep
Hmm.
that in mind. It's business taxes are due March 15th. Extensions. Okay. If you miss the deadline, automatic extensions run up to October the 15th. Does this mean the tax filer has filed Be Real, or
No,
does he automatically get this grace period?
no. Here's what happens, right? You have until October 15th to file your taxes, but you don't have until October 15th to pay your taxes. Okay. So normally you have to pay up to about 90% of whatever you owed the previous year in order for you to not have that penalty. Okay. I need to check it to make sure, laws change with the new administration coming in. Maybe they change it up a little bit. But normally what happens is you have to have, like I said, once again, the form that you need to complete. You can go onto irs.gov and simply do a search for tax extension, okay, and or tax preparation extension, that type of thing. And they'll the form will come up, takes about 2 minutes. I mean, literally, and I believe you can do it online as well. Okay, so it's pretty simple. But once again, just because you have more time to file doesn't mean you have more time to pay. Okay. That's why before you do that, speak to your accountant to see if, in fact, you're going to owe taxes prior to that April 15th deadline.
So if you miss that deadline, what I'm hearing is you still have to request it through the application, right?
Yes.
Right.
Yes.
And if you owe any money, you got to get that money in. Uh,
Yes.
that's without to avoid the penalty.
Yes, and it's kind of based on the previous year, and I'm not going to go into any details because once again, the laws might have changed, but it's based on a percentage of whatever you owed the previous year. So chances are, but that doesn't mean that because you owe this year, especially if you anticipate they're going to have a tax burden, that you won't owe. Speak to your accountant so they can take a look at your individual situation. So I don't want to put out this general statement about how you can handle this. Okay.
Okay. So let's talk about documents. Knowing what documents are required to prepare your taxes is a big step towards a successful tax season, right? Missing documents can delay your filing. BB, what are the basic documents a filer would need to file the taxes?
What is it? Normally like two basic documents that just about everybody gets, and that is your W-2 if you're working, and if you happen to um, be getting any type of business income, okay, that may be distributed to you as well. And then you have the 1099s, okay. And that could be a 1099 INT, which is for interest, could be miscellaneous. It could be what is called an NEC, which is like if you have some other types of business income. Let's say you had an online business, right?
So, B, let's talk about the essential documents, right? Knowing what documents are required to prepare your taxes is a big step towards a successful tax season. Missing documents can delay your filing. What are some of the basic documents a filer would need to file their taxes?
For the most part, you're probably going to get a W-2 and perhaps 1099 or 1098s. Um, those are the main three documents. W-2 income, obviously, is what you receive as a result of being an employee. 1099 can be like miscellaneous or interest or dividends, that type of income. And then you've got your 1098 forms, which could be like mortgage interest and deductions and student loan interest, things of that nature may also be included. Those are normally the major uh, things that we'll see throughout the year. Do you receive anything else besides that?
I'm thinking like you would have to, for income, like
Mhm.
include child support, alimony, that type of stuff. Anything outside of your wages?
Yeah, child support is neither taxable nor deductible. Okay.
Are there any different? Well, I'm sure there are. What are some of the forms that are used for business? That the basic forms for business.
Um, Basically, you have like a what is it, K1 distribution
Schedule
that you
K.
make. Yeah, if you're part of a partnership, and then you'll probably also get a 1099, and that could be like an NEC or 1099 miscellaneous income. Um, those are the types that you normally get from different businesses. So let's say you were a landscaper, and you did some work on the side, and the company sends you a 1099 for for that income. Okay, that person is going to be responsible for paying taxes. And here's a tricky part, because you're not just paying taxes on that income, regular income tax, you're also paying business tax on it as well.
Mm,
Okay, so there's two sides to it, and it's called self-employment tax. So they kind of hit you both ways. Although a portion of it is deducted from your, there's a formula that goes along with it. A portion of it is being deducted from your normal income tax, but then they're adding back that self-employment tax. Okay.
gotcha. Can all of these forms be downloaded from the IRS site?
No, these forms normally come from whoever you're dealing with as far as an employer, or a business associate or someone you're doing business with or the mortgage company. These forms come from those organizations. Now, unless you manually sent it in, okay, and they have that file sitting there, chances are most people file electronically.
Mm.
And so when they file electronically, even though that information is sent to the IRS, okay, I've never really seen where they were the ones that gave you, let's say, a copy or allowed you to download that information.
Well, I was talking in terms of like if the employer, say the employer is looking for a blank form. I need forms. Can they get these blank forms from the IRS?
Oh, you're talking about, yeah, that's something you can just go on and work with your accountant. Like if you have, any type of accounting software for businesses, they'll be able to produce that for you.
Gotcha.
Oh, yeah.
Gotcha. All right. Well, that makes sense. Sources of income. Let's talk about that. When gathering the essential documents, it's good to know all your sources of income and don't just limit it to your job. And I think we just touched on this,
Mhm.
providing some other sources of incomes that a filer wouldn't necessarily think about,
Mm.
like alimony,
Mhm.
child support. That's all stuff coming in. Do you know of any other ones that
Yeah,
pretty common, but we would overlook that?
yeah, here's one that we all overlook, and that is cancellation of debt. Okay. That is, if you owed, let's say, $10,000 to Macy's, right?
Mm-hmm.
They cancel that debt on their side, that's going to be sent to you as income on your side. So let's say you became delinquent that account. Yeah. So if you're not paying attention, you won't understand that, hey, this is now income, okay, on your end. Because anytime something gets written off on one end, it becomes income on the other end.
Oh, wow. I didn't know that.
Yeah. So that's something you really have to pay attention to because you might get something and be like, what's this? Not realizing it says 1099 up there,
Right.
and that's that miscellaneous income we were talking about earlier.
And sometimes when people fall up into that situation, it's not one piece of debt, right? It snowballs. So it's a
Yeah,
bunch of it,
yeah,
a bunch of
yeah,
credit cards got written
yeah,
off, and that could be significant.
yes.
That
Especially
could
if it
be
all happens.
significant income that you
Yeah, if
didn't
it all
really.
happens at the same time. So let's say you got $10,000 from Mastercard, 10,000 from American Express, 5,000 from Macy's. That's $25,000
Mhm.
extra in income that you haven't paid taxes on.
Right.
You're going to be responsible for. So that's a good one.
Well, thank you for that one. I didn't even realize that, and I didn't even think of that. That's what I mean. Sources of income that come in and we don't really think of it,
Yes.
right?
Yep.
Well, we're going to take a quick break on that note. We'll be right back. Welcome back, everyone. So let's talk about deductions. Be real. What are some examples of deductible expenses?
Oh, good one. Um, well, we all know that we have mortgage interest that we can deduct. We have uh, what is it? If you're making contributions to a charity, that's deductible. There are some business expenses that if you have a side business that you can also deduct things like mileage, cell phone. If you have a business in your home, you can deduct a portion of that. There's different types of equipment where you can have depreciation. So there's quite a few different things that we could be taking advantage of that we're not, to be honest with you. But I can tell you this before I go into that. I want to say this. I want to back up for 1 minute. Uh, President Trump has made it a little bit more difficult for us to itemize and get the same advantage that we were able to get in the past. Okay. So, for those of you that don't understand what itemizing is, it's basically what I was talking about. You're taking the individual expenses that are deductible and you're subtracting that from your income. Okay. Now, what you also are eligible to receive, depending on which one's going to be more advantageous, is you can take what is called a standard deduction, which means now, depending on your filing status, whether you're single, head of household, or perhaps married or married filing separate, you're going to get what is called a standard deduction. Okay, and it might be anywhere from $10,000 to $20,000 that you're able to deduct from your income. Okay. But now, with the new tax policy that just came up, I think that we're now able to deduct more from the state taxes that you're paying because that went away 4 years ago during
Mm,
the first Trump administration. But he's brought it back so that you have, and I believe there's a cap, and I don't know exactly what it is. Don't quote me on it. I think it's 20 grand. Okay, a cap in terms of the amount of state taxes that you're paying through your employer that you can deduct as well. One of the things I will tell everybody, and I tell my clients this all the time, start a business, okay? And the reason why I'm saying this is there are some deductions, even if you're not making a whole lot of money, okay? Go start a business, get to the point where you have some income coming in. Because now, if you're going on a trip, let's say, and you are doing some business out of town, that's deductible. The plane fare, the Uber, okay? Mileage in your car, if you're going to meetings, that's deductible. Your cell phone is deductible. The internet, the amount that you use that goes towards business is deductible. As I mentioned earlier, depreciation is deductible on equipment that you may have. So there's all these different things that you could be accumulating, things that you're doing on a regular basis that you could use as a deductible expense and subtract $10,000, $20,000 your from your taxable income, and it's something that I've seen clients do it, and I'm like, you do understand that if you're selling Mary Kay and you make 5 grand and you somehow accumulated 15 grand in taxes, I mean 15 grand in expenses, you now could, have a reasonable deduction against your income that you're getting from your job. So you kind of combine the two, okay? And overall, you'll end up paying considerably less.
Mm.
I've seen people go from owing 1,000 to getting back 3,000. Okay. And I picked up a couple of clients this way too, simply because I was able to say, hey, let me take a look at what you have, and see if there's something we can do. And they're like, oh, shoot, I was going to owe 1 grand on that. I'm so glad you came back and you was able to do that, you know? And and I know I'm probably jumping ahead with this, but one thing I want to really emphasize is if you have a complex tax return, okay, and what I mean by complex, well, it's just not W-2 income, anything more than that, probably want to sit down and speak to somebody about it. Okay.
Mm.
Because that $200 or $300, whatever you're spending, it could save you thousands just by speaking to a tax professional.
So what I'm hearing, it's beneficial to know your deductions and to really apply and use your deductions.
Yes. Yes. Because in even anticipating and keep in mind, what's most important that people don't do is you have to keep track of this stuff.
Mm.
You need to have a log with your mileage. You need to make sure that you have some type of a receipt or some way to tally up, your expenses. What I suggest that you do is you take one credit card or perhaps a debit card and you use that solely for business. Okay, so now at the end of the year, you can get a readout at the end of the month, figure out what it is you're spending each month. And it's a great way for you to be able to track your expenses. And now you just hand that information over to your accountant or tax professional, and they're able to take care of that. So for those of you that may be Uber drivers, right? There's certain formulas and certain things you have to do with that income. Okay, and if you don't know this, you're going to end up paying a lot in taxes. So if you're an Uber driver, you probably want a professional to do that as well, so that they're able to take the right deductions, and you don't get to the point where you have this huge tax burden.
Yeah, it can be tricky when you're doing and you're in a profession like that. You
Yeah,
always want to consult with a tax preparer
yeah.
before you
Especially if
do
you have,
anything.
especially if you have income coming from all these different sources. Let's say you
Mm,
drive Uber, W-2, got an online business. Those are three things that you really got to make sure that you're getting the most out of your expenses. Okay, we know what the income portion is, but what are you eligible for from a tax perspective in terms of being able to reduce your taxable income?
right. So a
I hope I
qualified,
didn't.
go ahead.
No, I hope I didn't get too complicated or too wordy there,
No,
because
no, no, that was
I
insightful because,
okay, okay.
when
I
we're
just
talking about taxes, we need to know every little intricate
yeah,
detail. You can
absolutely.
tell I'm not a tax expert, so I
That's
got the
fine.
questions.
I've been doing this since 2003. I'm
Hmm.
at 22 years, Plus, I've got an accounting degree and I took a course through H&R Block back in 2003. It was an 11-week course on tax preparation, right?
Hmm.
Harder than anything I ever did in college. Let me tell you, it was intense. Just imagine, you think you're going to go, oh, I want to go to this tax class, no big deal. 2 days a week, right?
Yep.
3 hours a day. And then you were expected for every hour you were there, you were expected to study for 2 hours.
Oh yeah.
Yeah, and you did this for 11 weeks. You had a quiz every week. You had to take an exam. You had to get at least an 80 on the exam. I mean, it was intense.
It was
It
packed.
was, it
Yeah.
was, it was great,
I can
you know.
imagine.
And back then, I don't know if they still offer the class, but back then, what they would do is they say, "Hey, now that you finish the class, you want to come work for us for $8 an hour?" And you're like, "Really?
$8 an hour.
Like really?"
I went through all of this.
Oh man, they don't tell you that. They
Yeah.
don't tell you that. Like they don't tell you that. Hey, we're paying peanuts here.
Yeah, and it doesn't seem like it would be right, because
Yeah,
that is an expertise. I mean,
yeah.
and you have to be good at math,
Hmm.
you really have to. Hmm. Okay, so a qualified tax preparer, how would I go about finding someone, a qualified tax? What are some of the things that I need to be looking for?
Right now, it's a little bit tricky, simply because everything goes to the IRS now, and everything is electronic. So there is a actually certification that you have to get through the IRS if you want to be able to file, more than five tax returns. Okay. So chances are when you call somebody, and I would suggest that you get a referral from somebody that you know,
Mm-hmm.
okay, when you're looking for a tax preparer, rather than just going through, the internet or what have you. I was almost going to say phone book with that. I would
Right.
myself.
How old are you?
Now, instead of just going on the internet, I would really ask around to see people that you know that have actually worked with that person before, because it's very sensitive. They're giving out, social security numbers, children's information,
Mm-hmm.
addresses, all the income that you have coming in. So you really have to be able to trust them. And most of the time, most of us know somebody who prepares taxes. So if you're looking for somebody, I would definitely look to get a referral as opposed to going blind.
Mm-hmm.
Um, but there are certain credentials, like I said, where they have to actually go through the IRS, okay, in order for them to become certified.
Well, do
So
they have some type of certificate that they can show you?
yes,
Mhm. That
yes.
you can ask?
And it is something new, and I'm going to be honest, I haven't looked into it, simply because, um, like I said, I took the course back in
Right.
the day. So I'm kind of like pretty much, I'm a certified tax preparer,
Mm-hmm.
but this was a while ago. Remember, I started in 2003. But maybe about 8, 10 years ago, they introduced the law because so many people were trying to file taxes and make money off it. So they said, okay, let's go ahead and reel this in and get to the point now where you have to go to the IRS, get that certification, and then you become a certified tax preparer through them.
Well, that's comforting to know that the
Yeah,
IRS at least has their hands in it and they're
yeah,
monitoring that process.
yeah. Because and I think there's probably a lot of scams going on. A lot of fraud, people being taken advantage of. So they said, wait a minute, we got to take care of this.
Yeah, and I think in your notes you mentioned signing a blank tax return. So what's that all about?
A
And I
blank
think you
check.
put do not ever sign a blank tax return. So what's the scam behind that?
Um, wow. I never really, unless they have the rest of your information, you know, and now they're trying to make it so that, let's say you did get a refund, it's going into their checking account.
Yeah.
So that would be the thing. The big thing would be, forget everything else, because keep in mind when we sign it, it's electronic anyway.
Mm-hmm.
If I have your checking account information, Social Security, W-2, blah, blah, blah. Now, if I file those taxes, and this is another thing that I'm sure they were doing before, I filed your taxes and you thought it was going into your account, and I'm having it go into mine,
Yeah.
Because if you look on it, I don't know if you've ever done your own taxes, but it'll tell you, okay, do you want to use more than one bank account
Bank
to
account. Yep.
deposit it into? So it's very simple for me to say, okay, I'm gonna give this person $200. I'm gonna be like, oh, what's going on? And I'm gonna take 2,000.
Mm-hmm.
Kind of split it up. So gotta be careful with that too.
Filers beware. And on that note, we're going to take a quick break. We'll be right back. Welcome back, everyone. We're going to wind down this series with just a few tips for you before you sign, be real. What are some of the things that our viewers need to review before they sign a tax return?
Ooh, number one is make sure all the documents, you know, are included. All that information is included. And one of the things that we miss all the time is those 1099s. And it could be interest, it could be dividends, it could be a 1099 NEC, which is coming from any businesses that you may have had. It could be like we talked about earlier, a cancellation of debt. Okay. So that information is all being furnished or sent to the IRS. Okay. So you might think, oh, the IRS is not asking for it. I don't need to attach it, blah, blah, blah. Okay, that's fine. But that 05 number or federal ID number is being tracked. Okay. So when they send that into the IRS, they've got your social security number, your address, who it's being sent to, from what company. So even though you might say, oh, I didn't get that in the mail. Okay, that's fine. You didn't get it in the mail? Well, we received it, electronically. So, you do in fact owe that $10,000 unless you wanted to go in and dispute that income. Okay.
Mm.
Another thing too is you want to make sure um, that social security numbers, okay, the name is spelled properly. Like if you've got a middle initial and you've done that in the past, okay, let's say, like my name is Brian J. Scott, okay, but let's say on my tax return, I just put Brian Scott, okay. Sometimes if you go to file electronically, the names may not match up. I had another
Well, there's
case.
25,000 other Brian Scotts.
Yes, yes. Or sometimes you transpose, especially if you're doing it for the first time, transpose the numbers. Maybe the last two numbers on your social security number are backwards. Make sure that information is correct. Make sure your address that you have on the tax return matches what's on the W-2. Okay. Um, Make sure if you're sending it in via snail mail, you're mailing it in as opposed to doing it electronically. You do also want to make sure that both parties have signed it. There's a couple, okay, and you've dated it as well, and make sure you're signing it in the proper place, because if you don't, it'll stall your return. And that's why a lot of people they'll send it in. They're like, why is it taking so long? Well, there's probably some income out there that you weren't aware of, or perhaps you didn't sign it. And if that's the case, they'll get in touch with you and let you know. Um,
And I would even suggest, speaking of mail, if you're going to mail it, go ahead and pay that extra and at least use an overnight carrier. Well, that requires a signature
an
because those are
alternate signature card,
confidential
absolutely.
documents. You want to
Yes.
ensure that it gets there.
Yes. And that is actually on the return. Okay, when you look at the tax return, it tells you how to go about doing it. Okay, so when you go in and use tax preparation software, I use H&R Block. It prints out everything that is needed. Okay, and all the steps that you need to take. So if you happen to do it yourself, or you got instructions from an accountant, and they said this is what you need to do, it's going to tell you what documents you need to include. Okay,
Mm.
what's going to go with federal, what's going to go with state. Sometimes you may have to include a copy of your W-2, or you may have to include your Schedule C, or whatever the case might be. Whatever that information is, they're going to ask you for it, and it will be listed on that form. Okay, so there's really not much. Whether you're sending it out electronically, it's going to provide you with the instructions, and if something happens which it doesn't go through, they're going to tell you what you need to do to correct it. Okay, but if you're sending it out through the mail, that's when you really need to double check to make sure that whatever's in those instructions, you've done. Okay. Because if you missed one of the forms, maybe a W-2, 1099, okay, that could delay your return.
Oh, yeah. And we don't like delays when money's coming back, right?
Ah,
Well, now you got your taxes in the mail, everything's done. The only thing you have to do throughout the rest of the year is stay up to date on the tax law changes. Staying up to date on the tax laws each year, because they can affect deductions, credits, and filing requirements for the next coming year. By following these tips, you can make preparation a whole lot smoother, avoid common mistakes, and ensure you maximize your refund or minimize your tax liability. Be real. Is there anything else you want to add to this series?
no, I just want to let you know that next week we're going to be talking about tax planning slash getting your money right slash getting prepared for next year, whatever you want to call it. But just getting to the point we're learning, getting more information about IRAs, getting more information about 401ks and 403bs, and certain things you can do to protect your home if you're elderly. And we're going to give you some really good advice. And we hope to have a guest next week. Okay. But if we don't, then we're going to give you a high level overview. Okay. But if we have a guest, then we're going to be able to get into a lot more detail when it comes to things like living trusts and, what to do if your parents are being put into a home and, they have a home and now you've got to use you know, a reverse mortgage or what have you to pay it off. So all that stuff we'll be talking about. I can't wait
Absolutely.
till we get to the point where we're talking to the guests, where we can have people call in, and be able to ask questions. That's going to be great.
Oh yeah. Oh
That's going
yeah.
to,
You don't want to miss it. So
yeah,
stick with us.
it's coming. It's coming.
It's coming. That's a wrap, folks. Enjoy your weekend. And until next time, keep growing, stay motivated, and we'll talk soon.